Hi, it's Mr. Benson here. I just want to quickly explain the first couple of ideas in income tax, which is what I want you to work on today. Now, you may have understood this from reading it, or hopefully the teacher's been able to explain things to you, but I'll have a go as well, so this is another resource for you. Okay, so income tax, which we might not be entirely fond of because it takes some of our money, is one of the ways in which the government can then fund things that we do like roads and schools and police and hospitals. Now, the way it works in Australia is we have what's called pay as you earn, or PAYE, where we get a certain amount of tax taken out of our pay packets however often we earn those. So say we're earning salary and we're getting that paid fortnightly, then every fortnight some money will come out of our pay. Now, what we're paid initially is what is called our gross pay. So say someone's on a salary of $52,000 per year or per annum, then we know that if we want to figure out a fortnightly pay for that, we divide that by 26, and that would work out at $2,000 per fortnight, and that would be their gross pay. Now, someone earning $52,000 is going to be paying some tax. So let's say that the tax that they're going to pay is $500, which might be a little bit high. So to work out their net pay, which is the amount they're going to take home, all we do is we just go the gross pay, $2,000, minus the tax of $500, and we get our answer of $1,500 as our net pay, or take-home pay. So that's pretty straightforward. Now, one thing that often happens is that we might spend money on certain things that are considered tax deductions. So they are deducted off our taxable income. For example, if you donate money to charity, that's an example of a deduction. Or if you have expenses relating to your work, those are deductions. So for those of you who want to go into trade, say, if you have to pay for your own tools, or if you've got work clothes and things like that that you have to buy and repair and clean and stuff, then those things would be considered deductions. So all that happens there is you have your taxable income. Now, this is generally done as a yearly thing, so when you're doing your tax return. So if I go back to my guy from my previous example, well, he had a gross income of $52,000, and then of that, let's say that he has, say, $3,000 worth of deductions. Now, you can't just make these up, you have to justify them and have evidence for them, or you can get in bother. And so what this will mean is just that his taxable income is just going to be 52,000, sorry, I'm getting a bit scribbly here, minus 3,000, which equals 49,000. So what that would mean is, if we flick back to our previous example, if he'd been paying $500 tax based on a salary of $52,000, but then he actually had a lower taxable income because of his deductions, then he would get a tax return at the end of the year because he's effectively been taxed too much, and so a tax return is where that all balances out. Okay, the next part, and this is in the next work set, is calculating the actual tax payable. Now, this is calculated on your taxable income. So with our first guy, we've figured out that his taxable income is actually only $49,000, not $52,000. Now, when you're doing this, you've just got to be careful with percentages, and also careful that you understand the table properly. So this is the table that's on page 82 in the book. I think it's about the fourth attachment in resources. So I'll flick over to a blank page and we'll start off with our example of taxable income equals 49,000. So when we look back to this, what it's saying on the table is that now this is rather old. The tax system has changed a bit since this was done, so these values don't actually apply anymore. So the first $5,400 you pay no tax on. So in this case, there's going to be $5,400 where there is going to be, now just call this dollars over here because I can't think of anything better. Over here I'm going to put the tax amount, and for that amount there is no tax. So then when we look back at our table, what we see is that up to $20,700 we're paying 20 cents in the dollar. So we know that this guy's earning over that, so what we've got to think about is how many dollars is he paying 20 cents in the dollar on. So $20,700 minus $5,400 is $14,700. No, it isn't. That's embarrassing. $15,300, sorry. $15,300 that he's paying 20 cents in the dollar on. So to work that out, this is the same as saying 15,300 times, so 20 cents in the dollar is the same as 20%. So this is 15,300 times 20 divided by 100, which is the way we've talked about working out percentages. And what we get for that is 15,300 times 30, and we get $3,060 that he would pay. On that amount. Now we look back again and we see that the next tax bracket is from 20,700 up to 36,000. So that is $15,300 that he is going to pay in the next tax bracket. Sorry, my cat is just jumping on my table and being super annoying. So $15,000 in the next tax bracket, and in this tax bracket he is paying 38 cents in the dollar. So what we need to do is a calculation like the one we've done over here. Whoops, I forgot to write down the number over here. But instead of doing 20%, we're doing 38%. So again, we've got 15,300 times 38 divided by 100, and we get a tax amount in this case of 5,814. Now this guy is earning still more money than this. So if we look back again, he's earning $49,000. So that is $13,000 in the last tax bracket. So he's going to be getting $13,000 in the last tax bracket, which is taxed, at 46 cents in the dollar. So again, same deal. We just work out the amount, which is 13,000 in that tax bracket, times 46 divided by 100, and we would get 5,980 as the amount of tax that he's paid in this example. So he doesn't. This adds up to his taxable income of 49,000. So there's no more income that we need to tax anything on. So the total tax that he's paid then is just the sum of all these numbers. So we just add 3,060 plus 5,814 plus 5,980, and we find that this guy has paid tax of 1,4,854 in this example. Okay, so hopefully you can use this to go and work out some of the the tax payable examples in the second problem set.